Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video. Back to business, traders. Let's get back to work. So at this junction, you don't want to buy anything yet. So let price keep doing its thing and give us a bullish pattern. Now, because of the fact that price has given us these breakouts, okay, you see the bears are really angry. With a simple illustration I gave you guys, when the Mr. John finally ends up punching the giant gets angry and gives him a very bigger blow, right? That's what happened here. After the bulls finally pushed and broke out of that resistance and even broke out of the next resistance, the bear said, "What? How dare you?" They pushed deep down. You see this deep move? So at this junction, you need to be careful. Now, this is now where we talk about a lot of traders who have made profit only to lose it after the profits. This is what usually happens. You saw a good level of a good area level and where you took your entry, you bought and bought and bought and bought and made a lot of profits. But because of greed, oh, I made $100. Wow, if I can make $100, it means I can make 500 today. And you enter the market again to buy more. This is what will happen. After you've bought all the things you bought here, and you just felt like, man, you see this level, I'm going to buy to this level again. You place another buy out of greed. And what happens? Because the bears have been hit in a massive way beyond their expectation, they will push with full force and anger deep down. And this when a trader will say, hey, I made loss. Okay, I know I'll make it back now. And they buy again. It's going bullish, right? Well, it hits their stop loss. They'll say, okay, I know I'm going to make it now. They buy again. Oh shit, it's going down. And they're losing all they've made for the day. That's why we talked about risk management yesterday, and the 9-box strategy, the 9-box rule I taught you guys last week. Put those things in place, make a certain profit and leave the market for that whole day, come in the next day, because these things often happen. It happens so often, okay? And you don't want to fall prey to it. So if you've made profits, leave the market. And if you've made loss to a certain level, leave the market, okay? So in this case, you see what happened. The bears now push massively down because of the big blow that we good level for you to know if you should take entries or not. So let's see how we played. Now, you must take note that we're using the Forex charts for this because there's no auto play in for volatility and boom and crash, okay? So we're using the Forex chart. That's why you're seeing some massive long move like this, okay? So this happened. For those who are studying Forex would know what this long move means. This is when a news is likely read, a news that affects the markets, okay? So you don't often see this kind of big, huge spike in a volatility index market unless it's boom and crash, okay? So just take note of that. So we're looking for another good entry. from support and resistance zone. Prices as supports, price back into the zone. You see, the bulls are really taking strength in power. The bulls are really taking strength in power. Let's see if we can spot out any pattern around here. What pattern can you guys see around here? Can you see any pattern around here? Use your chat box for our. Excuse me, sir. Which time frame is the best to know your support and resistance? Thank you. You can know your support and resistance at any time frame. No, actually, it's good to plot out your support and resistance from your 4 hour, your 1 hour, and probably your 15-minute time frame, because the more you're going to lower time frames, the more you keep seeing some uh some support and resistance zones that were hidden. Okay, you can begin to see them clearly. Inverse head and shoulder, inverse head and shoulder. I said higher time frame. Inverse head and shoulder, inverse head and shoulder. Okay, we can actually see inverse head and shoulder for the big picture. But if you look inside of it, you would actually be able to see some double bottom around there also. Okay, you can see some double bottom around there if you look inside the bigger picture. But if you're looking at it from outside, then that's when you see inverse head and shoulder. Okay, and as we could spot those patterns out, we could see what the bulls are doing with the pattern. So it's all about you seeing a pattern and use that pattern to your own advantage. Okay, so the bulls are really pushing. The bulls are really pushing. That's a good one. So you see why we talk about you knowing your bias for the day. And once you know your bias for the day, you want to only look for buying entries if your bias for the day is bullish, because you will see more uh bullish entries than selling entries if your bias for the day is bullish. If your bias for the day is bearish, you see more bearish entries than bullish entries. Okay, so automatically now we can reorganize this chat, but this channel like this. Okay, or you can decide to draw out something new. You can decide to draw something new, this, whichever way you want to draw it. Okay, so that's that for that. Now let's look for another market. Now here in another markets, we do the same thing. Just look for a good zone, cut it off from here. Okay, clear off. Imagine this massive bearish spike. Whoa, this is a very terrible news that must have been read in the forex market that really affected the spike like this. Okay, traders, let's get into this one. In our 4 hour charts, we want to analyze this market. You don't need somebody to tell you what kind of market this is. Tell me something, traders. What is the bias of this market? Bullish or bearish? Bullish or bearish bias? Bullish. Sir, please, I saw a message now. Let's say the market is on downtrend and it gets to support zone. What should I wait for before taking a trade? Let's say the market is a downtrend and it gets to a support zone, what should I wait for? If a market is a downtrend, is your support. If a market is a downtrend and it gets to support, what you should wait for is nothing else than the breakouts. You should wait for a breakout and retest before you sell again. Or I always told you, always make sure you have a plan B, okay? Or the price might likely hit that support and want to go back to a certain resistance zone. Okay, so if it goes back to a certain resistance zone, then what you want to look out for is your bearish pattern that will tell you, okay, you're good to sell. Then you sell again. I hope that was taken, Mr. Alex. I hope that was taken now. Did I answer your question? Okay. So those are the two things you want to look out for. Either you wait for the breakout and retest, you sell again, or if price decides that it wants to go back up to a certain resistance zone, then you look for your selling opportunity from that resistance zone. Again, two different ideas to break out the markets. Okay. So I was asking traders, what is the bias of this market? A lot of people said bullish, bullish, bearish, bearish. Now this is a 4-hour chart, okay? On the norms, if you look at it from this angle, it's a bullish move, okay? So it's indeed a bullish move, which see how it moved higher highs. But now you get to look at this, what's happening here right now. You see price breaking, price going now to the downside all the way from here. Price going to the downside all the way from here. Okay. This brings us to a new pattern that which we call the what is this triangle pattern called again? Descending triangle pattern. Okay, this is what we call the descending triangle pattern. Why is it descending? Because price is going down. Okay, there's another one called the ascending triangle pattern, and that's where you see a pattern like this and you see a pattern like this. How is it drawn again? Something like this. Okay, and then this one like this. Okay, then you see price in between it going boom 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 boom, you know, just drawing nonsense. But what I'm just trying to give you is a clear illustration that an ascending triangle pattern is a bullish pattern. Okay, somebody say it's in a funnel. No, you can also see a host or pipe. All right. So so this is called a bullish, is called a descending or ascending, all right, not a funnel. Okay, so this is for the bulls. This candlestick is for the, this pattern is for the bulls. It tells you that, hey, the bulls might likely take power because they are pushing up gradually. Okay, while they are ranging, while it's ranging, they are pushing up gradually. In this one, while it's ranging, it's pushing down gradually, is a descending pattern. So in this case, you can actually call this a downtrending market bias for the day, since it's on a higher time frame. Is a down is a 4-hour time frame, and you know for sure that between here to here you can make a lot of money. Between here to here you can make a lot of money. So it's actually in a down trend. We're going to also confirm that when we start taking trades in between these markets to know if we should really be looking for buying opportunities or selling opportunities. So let's get into the market and understand clearly what's happening. Now we bring out our supports. All right. So at least we still have enough selling orders before price will really get to this level, sure. So we bring our resistance. If it were to be those who trade, who take their entries from 4-hour charts or daily charts, those who are big traders, this once they see this as a range, they don't trade in it. Since they are trend traders, they don't trade in it. But since we are intraday traders, we are trading from 1 minute or 5 minute time frame, and this is a range in a big time frame of which is the 4-hour chart. So we can still look for our beautiful entries from it. But if we had seen this range in a 15 minutes or 5 minute time frame, it's not advisable to trade. Okay. And